And the much-awaited Tata super app Tata Neu is officially here. The super app from the conglomerate aims to seamlessly blend product, service, commerce and financial services all from the Tata stable in one app. Now, according to N. Chandrasekharan, Tata Sons chairman, today marks a new day and the app aims to make lives of Indian consumers simpler and easier. So how does the app really look and feel? How does it function? My colleague Utkarsh Chaturvedi is giving us this demo.
So the Tata Neu app is finally here. So every B2C product of Tata's is now available on this app. Some are still to come, but that is the idea. Let's give you a glimpse of how does the app looks and works. On my right is the projection of my phone screen. The Tata Neu app is open, and look at the screen. Now, in the Explore section, you have groceries powered by Big Basket, electronics, mobiles powered by Chroma, fashion powered by Westside, luxury powered by Tata Click, hotels by IHCL. In the flight section, there is AirAsia right now, but I've been told that Vistara and Air India will join soon. Eat and drink, there's Starbucks, health, Tata 1mg. Let me try the grocery section now. If I click to the grocery section, you have this powered by Big Basket. You can order by category, the same experience you have at Big Basket app. Then you can close this, and now I want to plan my travel. I'm done grocery shopping. I'll go to hotels, and I will book my stay from here. And the same ways, you can buy electronics, you can buy flight tickets, you can do everything. Let's go to Tata Pay now. What is Tata Pay? How does that work? If you go to Tata Pay, you can scan and pay, you can request money, send money. So the UPI services are available. And then the most important thing of this app is the Neo Points and the Neo Pass. Now in the Neo Pass, what we've been told is that every Neo coin is worth ₹1. They are available 43 Neo coins right now, and they will be unlocking and they can be used. So this is something which will be a differentiating factor. You will earn Neo coins and then you can use it as ₹1. This is what the idea behind it is. And then obviously, there are the offers which Tata's claim are never before. As I said, there are still some things which will be added to it. So Tata Motors will be added, Titan will be added, Tanishq will be added, Vistara will be added, and Air India will be added. So all the services of Tata will be in the Tata Neo app and will be giving competition to a lot of e-commerce giants. Let's wait and watch how will this space go and grow.
And all eyes on the RBI's monetary policy meet as the street expects the central bank to take some cues from its global counterparts. Perhaps will they hike rates to fight rising inflation or give us a roadmap of when those rate hikes are coming? Will the central bank continue to support growth as unwaveringly as they have done so far? Meanwhile, the central government is exploring all viable options, including import diversification, to cool off the heat coming in from high crude prices. But what can we expect from the monetary policy tomorrow? My colleague Ankur has this report.
Monetary Policy Committee will be out with their verdict shortly, but before that, we try to make an informed guess what could be there in the monetary policy this time. So for that, we have asked three important questions. The first question is, well, what is the repo rate expectation this time? And 100% respondents said there will be no repo rate cut. For reverse repo rate, there is a slight increase expectation is there for 10% respondents. However, 90% of the respondents said that status quo is expected in the policy. The third and important question we asked about the change in stance. Will there be change in stance this time? 80% of the respondents said that RBI is likely to maintain accommodative stance. However, 20% believe that it may change the stance to neutral this time. So, all in all, what is there to be expected from the policy? The accommodative stance with a slight cautious bias will be there in the policy. Apart from that, few minority respondents expect that 25 bips hike in reverse repo might be there by Reserve Bank of India this time. Apart from that, the market may be prepared for a possible policy shift, and that is what is something to be expected in the policy this time. The important thing is that RBI may relook at the inflation expectation. That is what was hinted by RBI Governor shortly. Apart from that, roadmap on normalization is something what market is expecting this time. The market also wants to be prepared for rate hikes which may be there in the future. So that is something commentary will be important. Measures to avoid disruptions in the bond market is very important thing which all the stakeholders are watching towards RBI this time. Apart from that, if you just go to factors to watch, the first and important thing is inflation trajectory. After 4.5% was projected for FY23. Will there be change in the trajectory this time? That is something which will be declared by Reserve Bank of India. The GDP target revision might also happen, and we need to see that if 7.8% target for GDP is retained or not. The third important thing is that economic recovery and normalization from COVID-19 as the effects have receded. Now, what will be commentary on that? The fourth important thing is that is there a hint towards timeline for change in stance? That is something which market is watching out. And the fifth and the most important thing is the liquidity management amid a surplus which is already there in the system.
Right, Kaushik Das, MD and India Chief Economist, Deutsche Bank, with us on the show. Mythili, Bhusnurmath, Consulting Editor, ET Now, is also joining us. Welcome to both of you. For this quick preview of what we can expect, Mythili, let me start with your take. The question is there going to be the continuation of this fine balancing act where the RBI has really avoided tweaking inflation rates, interest rates upwards? Is it now too much to sort of not take into account the inflation fears that we see before us?
Tamanna, you called it a balancing act, whereas I would actually call it not a balancing act at all, because RBI is clearly veered entirely in favor of growth, completely forgetting the common man and what inflation means, not only for the common man, but ultimately for growth itself. So as Ankur said, I think market by and large expects very little change, because the RBI and the MPC currently has been completely fixated at growth, not realizing the cost at which that growth has been obtained in the past and how increasingly keeping monetary policy loose has been like pushing on a string. So perhaps the best we can expect is some change in the tone of the MPC statement. But apart from that, I think general consensus is that there will be virtually no change at all. Unfortunately, I would say, because as you mentioned and as Ankur mentioned, RBI has been way behind the curve. Almost every other major central bank has raised interest rates simply because inflation is now going through the roof. And this is, mind you, potential inflation, which is even worse, because we're just seeing the oil price hikes, which have not been reflected yet in the CPI. They're going to come and haunt us in the coming months. Unfortunately, RBI, for whatever reason, has still chosen to support growth. And to be very honest, the government hasn't made their task easier by having such a huge borrowing target. Even the first half borrowing target over 8 lakh crores. Now, that kind of money, where is the government going to raise from unless the RBI gives it some support? Now is the time for the RBI to dig its heels and say, look, we have done as much as possible in the past. Now we've realized that monetary policy has reached the end of the road, and it is the time to send the signal that we are at least beginning to turn. Whether they will do it, I'm not very sure, because unfortunately this particular MPC and the Reserve Bank currently has shown itself completely blind to what is happening on the inflation front.
Mr. Das, do you think that the RBI has now been, standing behind the concept of pushing growth, maybe at the cost of ignoring inflation for some time? If that is the case, can they continue now to do so? I mean, so much has changed since the last policy meet. You have the situation geopolitically, high crude prices, supply chains continuing to be choked. How do you think the central bank will move forward?
So, Tamanna, it's a very tricky situation for the RBI because on one hand, you have this inflationary pressure building up because of oil prices being over 100, above 100. And, on the other side, because of oil prices being above 100, that will also have a negative impact on, private consumption growth and whatever growth forecast that RBI had for FY23, which was around 7.8%. Probably would need to be pared down, a little bit more towards 7.5. So that kind of puts RBI in a difficult position. That on one hand you have inflation, being higher than what RBI had anticipated, but growth is also coming on the downside compared to what RBI had projected. So, tomorrow most of the economists are expecting RBI to, not do anything, maintain a status quo. That is mainly because RBI has guided markets in such a way in the last two meetings that, they have said that if they want to change, they will kind of guide the market, they'll not surprise the market. So we haven't heard anything from RBI in the last few weeks to suggest that RBI wants to make that shift of stance or raise the reverse repo rate. So on that basis, based on the guidance that we have got from RBI in the last two meetings, most of the economists are, kind of coming to a conclusion that RBI probably will not do anything tomorrow. But if RBI wants to change the stance to neutral, will it be a big surprising moment? Probably not, because given the way inflation is kind of going to go up over the next few quarters and what has happened globally, if they change the stance from accommodative to neutral, at least we won't be surprised, and probably it will be a good thing, being nimble and being ready for making whatever changes that are necessary in the next few meetings. Now, you spoke about the things that RBI can do. The other thing that RBI can probably do and will do is they'll try to support the bond market, because as Mythili mentioned, that the government borrowing program is going to be huge. And April, September, we'll have a 8.5 trillion gross borrowing. So I guess RBI will kind of try to, tell the market that they'll be supporting the bond markets, and they'll probably be doing OMO purchases and, something called Operation Twist, but not, the GSAP program that they had done last time. GSAP basically, gives a commitment that I'll be buying so much bonds through April, June, or July, September. Probably RBI doesn't give that outright commitment, but then they probably would have to support the bond market by buying bonds through OMO purchases or Operation Twist. Unless they do that, then 10-year bond yields could go north of 7% and much higher, which probably RBI would not want. So overall, I think RBI will guide the market for a possible change in stance, if not in this policy, then in the next policy. So they'll provide that guidance. At the same time, they will be a little bit more hawkish on inflation. They had given a 4.5% forecast in the last policy. I think that goes up to 5.5% for FY23. Our own forecast is also 5.5%. And growth, they probably reduce from 7.8 to 7.5%.
Right.
On balance, they'll probably guide the market for a change of stance to neutral in the next policy and not in the next on tomorrow's policy.
Mythili, just on the question of growth, and isn't that where it becomes a little difficult to predict what's happening and where we're going from here? We saw what the finance ministry also put out today, where they said that, India is trying to shop around for cheaper crude, etc. But what are the major headwinds to growth that the RBI will now have to take into consideration?
Politics and the fallout from that, higher oil. Now, higher oil hits us in many ways. It damages the fiscal deficit, the current account deficit, as well as higher inflation. So high oil prices are never good news for India. So at the same time, we have all the other structural factors which are holding growth down in the past. There is low credit offtake, high government borrowing, and COVID. We hope that we've seen the last of COVID, but nobody's very sure. So with all this uncertainty, the point is not whether growth can be improved or not improved. The point is that can monetary policy do any more to support growth? What is the cost of that monetary policy easing? If the cost of that is no higher growth, but higher inflation, then the Reserve Bank, whose mandate it is for price stability, must realize that you need to go back to your swadharma. What is your swadharma? Price stability. And if inflation is as high as it is now, 2 months consecutively over 6%, which is the upper end of RBI's target. Now, next month, going forward, again in the month of March and April, it will remain high because we haven't seen the full impact of the pass-through of oil prices. So the RBI should realize that, yes, they did a good job, a great job in keeping monetary policy easy at the time of the pandemic first hit us. But now you've reached the point where further easing or further loose monetary policy does more harm than good. Wisdom is in knowing when you need to back off and when you need to support. At this particular juncture, RBI has already lost the bus, missed the bus in many ways. We're way behind the curve. But now is the time to send that message. And if you revise your inflation target upwards, but do not have action to suit your words, then that makes it very contradictory. So this is the time for the RBI to send the signal. At the very least, the tone should become a little more hawkish. The stance can be changed to neutral without too much damage, because markets in any case have already discredited whatever RBI said. We've seen the 10-year yield touch almost 6.9%. There was a time when RBI used to come in any time it crossed 6%. So clearly RBI should realize that, yes, we've done our bit. We can't do any more. Now is the time to back off.
Well, that's truly the big story coming in at this time, and all eyes on what Governor Das says tomorrow. Thank you so much, Mythili and Kaushik Das, for joining us today.